Hello and welcome to HFX Expert Interviews. Today we're going to be learning about ESG investing. We'll be talking with Gui Bragança of JGP Investments, one of Latin America's most prestigious asset management firms. First of all, Gui, tell us about about your current role.
All right, I work for the investment team in JGP Asset Management. We're an asset management firm in Brazil. We were launched in 1998, so we're one of the most traditional investment firms here in Brazil, an independent one. We managed about 30 billion reais. And we have an asset management firm and also a wealth management as well. I'm a partner here. I work here for 10 years since 2011. So almost 10 years, and that's it. And I'm quite involved with the ESG efforts that we're doing right now.
Okay, so Gui, tell us about ESG investing. So what is ESG investing?
All right, ESG stands for environmental, social, and governance. It is I would say it's an additional filter that you should include in your investments in order to understand which facts could affect the companies due to risks that would affect the company in this different three spheres, right? So
okay.
Environmental risks, social risks, and also governance risks, right? It is, we could say, when we talk about environmental issues, you are talking about the conservation of the natural world, which includes the efforts with the climate change, right?
Okay.
The gas emissions, right? The CO2 emissions, the pollution, biodiversity. I don't know how you call it, but when you manage your waste, and how the companies do that. And when you talk about the social factors, those are the measures that the company has for considering the people that work for them, right?
Mm-hmm.
So all the stakeholders, the clients, consumers, the supply chain, the engagement with the employees, diversity, community relations, data protection, every kind of relation like that. And the governance factors are about the patterns to manage a firm that talk about the composition of the boards, the committees, the auditing, fiscal auditing, so all the corruption governance, the governance that you have against corruption.
Mm-hmm.
Such things. That's it. And talking about ESG investment in the world, I would say that it's about there are some researchers that say that 50% of the investments in Canada and Europe are already including ESG as a filter, right? Or
Okay.
so, or in other words, it would be the same thing to say they are sustainable investments, right? And 60% in Australia, New Zealand, and the United States, it's about 25% of their investments. And in
Okay.
Brazil, it's quite teeny, so it's still little. We're starting to build up this environment, I would say.
Okay. Guy, could you tell us a little bit about the history of this investment theme, the ESG investment theme? When did it start, or when did it start to impact you in particular?
All right. The first time we heard about it was maybe 2018. Some of our investors asked us about what we did uh, in ESG, and we had no answer for that.
Okay.
To be quite honest, I would say that I didn't even know what ESG stand for.
Okay.
So we being quite honest. So we had to study a lot about it, and we did so. We have um, people here that like to study it, so this helps. And meanwhile, while we were still studying, because the thing is, when you think about ESG, the first thing that comes to investors' mind is that maybe it will be a filter that will reduce the investable market, right?
Okay.
The number of assets that you would be allowed to invest,
Okay.
because uh, the first impression is that when you integrate ESG to your investment process, that means that you will have a huge negative screening that would just block a bunch of assets, and you wouldn't be able to uh, invest on those assets. So the thing is, it is not like that. There are different approaches, and yeah, after we studied a lot, we just understood that we have much more benefits than problems, I would say. Um, the first thing is that there's a high correlation between the the companies that have high score in ESG and lots of different um, benefits, such as uh, to attract and to retain the best talents. Also, the value of your brand value, right?
Mm-hmm.
The engagement of the stakeholders, the cost of capital. You know,
Okay.
there are fewer risks, like operational risks, financial risks, image risk, right? Regulatory risks. So it is, in our point of view, a massive uh, strategic differentiation. Can I say that?
Sure. Yeah.
Uh,
Absolutely.
yeah, and also it mitigates lots of risks. It reduces the volatility of the cash flow of the company.
Okay.
So just to give you some examples, I know you're pretty much aware that this new generation, right, already comes with this hardware that is more developed than ours, right? If you talk with, isn't that right? If you talk to a teenager or someone that is in their early 20s,
Mm.
this person will probably uh, think about sustainability in a more easy way. I wouldn't say the best word would be easy way, but in a more they don't have to force it, it's
Sure.
natural.
Uh-huh.
uh,
It's like their native language.
that's it.
Mm.
It's like they're a native sustainable person. That's it.
Yeah, okay.
They care a lot about uh, they care about fast fashion. They don't want to buy lots of different things.
Hmm.
There are some researchers that show that young people have much fewer number of items than we do have,
Okay.
right? Like you have lots of pants, lots of, I don't know, shirts and pants, and they only have like five really nice shirts and maybe three different jeans, and that's it. They
Uh-huh.
they they buy the best cell phone, but they don't have lots of of uh, different gadgets and stuff like that. So also this new generation, the millennials, right? They just don't want to work in a company that doesn't have a very good purpose, a very clear purpose,
Mm.
and this purpose should be related to sustainability as well.
Interesting.
uh, uh, since once we everybody has a cell phone uh, on their hands
Hmm.
nowadays, it's like you have billions of media centers, right? Uh, that that could just turn something viral in 2 minutes.
Hmm.
So if the company is not worried about sustainability, if somehow they have racial problems now, something like
Hmm.
that, they could have a major problem, right?
Sure.
Because someone could just make a video of that, and that could go viral and maybe destroy a centenary company. you know so just to give you some examples, it is the difference between the I would say the old economy, or maybe the old social purpose of a company,
Hmm.
against versus against the new social purpose of a company. It is the capitalism of the shareholder versus the capitalism of the stakeholder.
Hmm.
To give you another example, um, uh, I would say that this new capitalism of the stakeholders uh, has the company has to worry about having its revenues. Um, I don't know the right word for that, but maybe like fueled by every stakeholder. You know,
Okay.
Everyone has to notice it. The regulators, the government, the shareholders, the employees. The supply side, everybody.
Hmm.
Uh, and why? I'll give you an example. Like um, the fuel companies in Europe, like the oil companies in Europe, have
Okay.
to compensate their emissions. Um, they have to they have to pay for their emissions, right? And in Brazil, like it's an carbon offset, I would say,
Okay.
and they have to offset their carbon emissions, right? And in Brazil, actually in Latin America, the oil companies don't have to do that, you know.
Ah,
And
okay. Okay. I didn't realize that.
yeah, and this will happen one day. The Latin
Sure.
American oil companies will have to offset their carbon emissions as well, right?
Hmm.
And once they have to do that in a while, like in the future, they will have a derate, like a massive derate. And if you don't have ESG in your investment process, you would just won't be able to see that, you know, to understand that this is going to happen, you know. So it is really important to have
When you
ESG in
said
your.
D rate, do you mean, are you talking about discount rate?
Yeah, that's it.
Okay,
Mm-hmm.
sure. Yeah,
Right.
very, very interesting. So, Guy,
That's it.
given all of the impacts that you've talked about, that you know, the way that ESG can impact on a company, both positively and negatively, have you started to see now a correlation between ESG performance measures and share price, like a direct
Okay.
correlation?
Yeah. Okay. The theory just doesn't show it really in a clear way, I would
Okay.
say. But there's a reason for that.
Mm-hmm.
The rating companies, they should do, I would say, a better work, because there is the thing about the, I think it's the materiality matter.
Okay.
Do you know what that means?
Yeah,
This means,
I think so. Yeah, but why don't you explain it for us, Guy?
oh, okay. This is very important. To explain you maybe with an example, uh, it is not good enough for a mining company to um, have lots of efforts or spend a lot of money in social programs, I would say.
Mm-hmm.
There are in the communities around, where they have their berries, right? Barriers.
Okay.
Um, if they're not uh, really worried about not having a environmental problem, you know.
Okay.
The companies need to focus on what is really material to their sectors, you know.
Okay.
That's it. Like a fashion company should worry about the how much water they spend during their production process, right?
Okay. Yeah.
uh, um, a beer company should have the same worry, right?
Mm-hmm.
Water is not important for a bank, for example,
Sure.
right?
Uh-huh.
So when you and you asked me if there's a good correlation between um, ESG and performance, right?
Mm-hmm.
Or stocks performance, right? The um, if you okay, this really important study done by George Serafin. He's a Harvard Business School professor, and um, he adjusted the ratings by materiality. You know,
Okay. Okay.
because you could have
Guy,
very different.
can I just pause you quickly? And I hope
Sure,
that
sure.
I don't want to distract you.
Hmm.
But we haven't actually talked about what the ratings are. So what ratings exist for ESG?
Oh, well, there's a bunch of them. MSCI, there's lots of them. It's like ratings, like credit ratings, stuff like that, you know.
Okay.
But the rating companies shouldn't do the same questions for
For
all
all
the different
companies. Okay.
companies.
Okay.
Yeah,
So going back to this Harvard professor, he found that once you adjust for materiality, that there is a link.
there is a big link actually,
Okay.
you
Okay.
know.
Okay. That's very
So
interesting.
because you could have ESG scores way the same company could have way different scores uh, depending on the rating company,
Of
you know.
course. Of course.
and why is that? Because some of them worry about materiality and others don't. You know,
Right.
you should ask the right questions to that company, considering the sector that she has, right, where she's in. So that's it. When you adjust for materiality, the correlation is really high. You know,
Okay.
The companies with high scores adjusted to materiality, their stocks, their stocks are they have like a really good performance. That's it.
That's
You know?
very interesting. And I'm guessing that the Harvard study was conducted on US companies.
I think mainly it's about maybe 3,000 different companies, so it is a pretty well done study. You know, wouldn't be different once it was done by a Harvard professor.
Yeah.
But I think mainly in America, I can check that on that, but I think America and also European companies as well.
Oh,
You know?
interesting. That's very interesting.
Yeah.
So, Guy, going back to the ratings, so I know for credit you have the Standard and Poor's and Moody's are some of the big credit ratings agencies.
Mm-hmm.
What are the names? What are the ratings companies? I think you mentioned MSCI. So is it the MSCI ESG rating? I'm not sure exactly how it works.
Yeah, it is. All these companies, they have like a division on ESG, you know,
Okay.
and the major one are MSCI. There are some of the consultants that also have ratings, you know, but those are like the most famous ones, I would say.
Okay, interesting. So, so how do you, in your experience, Guy, and I suppose you can talk more particularly about Brazil, although I'm sure the lessons that you're taking away from your work could be applied anywhere globally. But how do you see, or how well do you think companies are responding to the ESG challenge? You said at the beginning of the interview, you said that that in the US and Australia and New Zealand, you said that ESG is now a very significant factor in the investment landscape. And I'm assuming that companies in the US and Canada and Australia, New Zealand, etc., have a significant focus on ESG as part of their management. But it'd be good to hear what you're seeing directly with the companies that you invest in, how well they're responding to this challenge.
All right. Maybe just to add on your last question, as I thought about it a little bit more, I would say MSCI, maybe Standard & Poor's, also the FTSE. So there's some of them, you know.
Okay.
Okay, so going forward to your next question, I would say the companies are dealing with it. They are receptive, I would say. I think that we talked about ESG here in Brazil in the last 4 months more than we have done in the last 4 years. You know?
Okay.
So yeah, it increased a lot. You know, there's a bunch of, it's like a really hot topic nowadays.
Yeah.
So the companies will have to adjust. You know, they will have to adopt it. Yeah. There was this news the other day that said you don't become a CEO because of sustainability, but you stop being one because you don't talk about it. You know.
Yeah, it's a need. It's a need to have.
Yeah, and there were a bunch of new agendas that just came to consolidate ESG, I would say. So David Solomon, the CEO of Goldman Sachs, said in Davos that the companies that want to go for an IPO using Goldman Sachs services, there's a need for them to talk about to be a sustainable company.
Right. Okay.
Larry Flink, the CEO of BlackRock, the biggest investment company in the world, is talking about ESG the entire time. He has he releases letters about it, and there was this CEO pledge of social responsibility with 200 CEOs of the biggest companies in the world that talked about a generation of new how do you call it, like new jobs, right? Such an easy word, and sometimes it just misses. For sustainable economies, innovation, like healthy environment in at work, new economic opportunity for everyone. So it is really a hot topic, you know. The companies that don't start to adopt new like the best practices, they will lose market value and market share. That's for sure. You know, there is this week we just saw this huge agricultural company here in Brazil that one of the hugest investment pension plans of the world just said that you won't invest in their stocks anymore because they didn't have a sustainable good answers for sustainability, you know.
Which, just out of interest, Gui, which company was that?
That was JBS.
Oh,
it is a meat company, right?
Really?
Yeah.
JBS has been in the news, hasn't it, quite a lot over the last few years.
It is a beef company, right? So a meat company, I would say. So you just have to do something. That's it, you know. If you don't, the agenda will just like overrule you. Can I say that? Like,
yeah.
Just like
will overrun you. You'll be overrun by this.
Overrun by the trend. That's it.
And Gui, one thing that we haven't touched on is, so we've got this. We've sort of got this growing awareness, a growing cultural awareness of ESG and how it's become sort of culturally essential to do. And obviously there are all of the performance benefits that companies have from being focused on ESG best practice. But what legislation are you seeing locally and globally that is actually mandating companies to be better at ESG?
I would say the main thing is about the regulation on pollution will just be harder.
Right.
You will have to compensate your carbon emissions. That's it.
Yeah.
And if you are there's like this major efforts, major pressure done by CEOs, by former ministers, economic ministers. Here in Brazil, 17 former economic ministers just signed a letter to the Brazilian government talking about the Amazon, that
Wow.
the government should do something about the fires in Amazon. There's this really interesting um, uh, uh, it's like a movie in Amazon Prime called oh my God, let me just check the name in English. In Portuguese, it's called Sob a Pata do Boi. It's like underneath the cow legs,
The hoof
right?
of the hoof of the cow.
Yeah, that's it. So maybe in English, let me see if I can find it here in English. English. All right. In English, it is called. It has the same name. So, Grazing the Amazon.
Okay.
That's the name. And so it is quite interesting because it talks about there are 85 million cows in the Brazilian Amazon. 85
Okay.
million
That's a lot.
cows.
That's a lot of beef.
Yeah, yeah. And most of the fires in Amazon are because of that, because it is very cheap to bring the cows from one land to another land
Hmm.
just by uh, putting fire on it. How do you call it? Putting
Yeah,
fire?
yeah, or just burning the land or
Burning,
burning the forest.
burning the land. Yeah, it's cheaper than trying to reestablish that soil.
Yeah.
So it is very important for example, for the meat companies.
Hmm.
The regulation will just increase a lot.
Yeah.
People, because of the agenda, the governments, the investors, the consumers, they will have their eyes
Yeah.
uh, on the companies.
I,
So
I,
it
su- I,
is.
s- I suppose, Guy, in a way, like asking about what legislation is there for ESG is it's such a huge topic. We're under those three pillars of environment, social, and governance. There are so many areas in which legislation has taken or is taking or will take place. It's impossible to give a simple summary other than that we can expect more and more legislation to enforce a sort of more holistic approach to enterprise in the future.
Sure, especially I would say that the main thing would be the carbon print. You know,
Right.
Regulators will come for the carbon print. That's it.
Sure.
You know, so the companies will have to report on their carbon print, what they're doing about it. If they're
Mhm.
compensating it or not. That's it.
Yeah. Wow. Well,
That's the main
Guy,
thing I would
Guy,
say.
it's been amazing to talk with you. I'm wondering if there's anything else that we haven't touched upon that you think might be relevant.
Oh my God. This conversation could last for like 5 hours, but I think we just we just touched like the main points. Uh, I would say that this is a learning process.
Hmm.
I started studying this like a year and a half ago. I'm still like a junior about it,
Hmm.
and but I just think that this is very important because you feel good about studying it, because uh, you feel that you become a better person, I would say,
Yeah.
by knowing more and behaving better.
Yeah.
Once you know better, you behave better. um, you stop doing little things that you just thought that wouldn't hurt anybody, but when you think about the entire population, it hurts a lot.
Hmm.
So you change your habits, I would say. and you think that you are studying because you're doing something that will make the world better, you know, that will probably uh, uh, at least postpone the climate change, you know.
Okay.
And this is a really way important uh, thing, you know. The climate change, that's massive, that's huge,
Mm,
you know.
mm.
if
And
we don't do if we don't do something, maybe that's something that we should mention.
mm,
um, this uh, pandemic, it just brought to the table uh, some some things. One is, maybe we should hear the scientific uh, community better,
mm-hmm.
you know. The second thing is that there is a huge integration between the social, the environment, and the economy, right?
Yeah.
People are losing their jobs because of the social and the environmental thing, you know.
Mm-hmm.
This pandemic, they always come from the animal world, you know. There's this thing, I don't know the name for this in English. Maybe it's zoonose, or I would say maybe it's something like that. In Portuguese, it's called zoonose.
Or
And
I think the term is
zoonosis,
zoonotic
zoonosis.
zoonotic diseases.
Yeah. So it's like a bacteria or virus that uh, comes from the animal world through
Mm-hmm.
the to the human world, right? So there is this integration between the different worlds, very important one, and we need to deal better with that, I would say. Uh, the other thing is that uh, we just the capitalism just works really well when you grow, right?
Right.
And we are probably going to face this new decades with a very leveraged world, right?
Mm-hmm.
This the central banks just like leverage their um, their balances, right?
Mm-hmm.
Because of the crisis, and especially because of the COVID, um, and we also have the demographics against us nowadays, you know, because the world is getting older, right?
Mm-hmm.
So we will have a growth pattern that will be lower than we used to have, you know. So
Mm-hmm.
probably capitalism won't work as well as it used to do. We need to think about how we're going to deal with uh, these different problems that could emerge, such as uh, this pandemic, um, that could really cause harm to the economy, you know,
Yeah.
because it will be harder and harder to deal with this economic crisis from now on. You know, the governments are already very leveraged. There isn't enough money for everybody in the world, you know, so it is a huge problem. So maybe this would be a final message, I would say.
Yeah, interesting. It's certainly brought home the interrelatedness of the global economy and all global stakeholders. You can't have a negative impact on one stakeholder group without that having a
Hmm.
negative impact on everyone else.
That's it.
And so, Guy, I guess I have one more question, and it's on a little bit of a tangent. Um, but it's I guess it's relating to training. So what have you seen out there which is helping? What tools are out there that you've seen to help train executives, or people who are entering into sort of leadership positions at companies, to help them understand and react better to this new paradigm?
All right. by on our point of view, um, we are an investment firm that knew little about it, so we hired consultants, you know, the UN. There's this it's like a signatory thing called PRI,
Okay.
PRI, right? I don't know if you heard about it. It's Principles for Responsible Investment. So nowadays we are a signatory of them. We hired a consultants for in order to adopt our investment process to ESG. We hired a consultant that was specialized in governance. Besides
Okay.
the fact that maybe that was the letter that we already had quite quite well seen in our investment process,
Okay.
um, we so it was about bringing people that really knew about the different agendas, different matters, and we brought them inside, and we did a bunch of workshops with our workforce, with our investment team. And besides that, I would say that this is a process that goes from inside to outside.
Sure.
You need to, there's a bunch of information there. You just need to look for it, study it, understand what happened in other countries, because I think that Brazil is right now in the point where that other economies were, I would say, maybe 10 to 15 years ago. you know
Interesting. Okay.
so so you just need to follow their steps,
Yeah.
and maybe you will get to a very good point. That's it.
Yeah. Very excited. Well, it's been great to speak with you, Guy. I really appreciate your time and your insight. You certainly are a master of this domain. Thank you for listening to the interview with Guy. If you would like to learn more about how HFX can help you and your executive learners with ESG training, please contact us today at info@hfxtraining.com.